My name is Jason Apis, and I work for a company called Debt Management Credit Counseling, and we are brought to you through your EAP. And we are a provider of a host of different programs and services for the Pasco County School District. We partnered with you folks for about, I'm going to say about a year, or maybe a year and a half, and we like to come out here and do different educational programs for you, different seminars. We are a not-for-profit credit counseling agency. The flyers that you have on your desk right here, the paper flyers, I'll just change the screen so you can see it. I don't want to spend too much time on this, but I just want you to know about the free and discounted services that we provide for you as well as friends and family members. Under the free services on your flyers is budget counseling. So if anybody needs budget counseling, everybody needs to put together a budget and so forth, just call the toll-free number on the bottom of that flyer. Tell them that you're from the Pasco County School District, and a certified credit counselor will spend as little or as much time as required to give you a great budget and help you understand where your money's going and give you some different type of corrective action plans that can help you manage your finances. We also do student loan counseling. The student loan counseling that we do, we will give you student loan counseling for free on the phone. If you want something in writing from us and you want us to put together a plan for you, there's a minimal charge, I think $20 or $30 for that. But the telephonic counseling to go over your student loan options is free. Foreclosure prevention, loan mods. If anybody has is in a mortgage at this point and they're behind on their mortgage, they can't afford their monthly payments on their homes and so forth, they're running into financial stress trying to stay up with that. We are a HUD agency. So as a HUD agency, we can contact the creditors, put together all the paperwork that's required to maybe go in for a loan modification for you, which might actually reduce the loan amount that you owe or reduce the interest rate that you pay. It really just depends on the individual program. But it's a free service. So again, there's no need for you to be paying so many thousands of dollars to help you with your loan mod. We'll do the paperwork and everything for you for free. And we'll be able to tell you what we can do to help you out. First-time home buyers, there's programs out there for you as well that if you want to become a first-time home buyer, you can take some of these different programs and it helps you qualify with the banks, maybe get a lower interest rate. Under discounted services, we have a loan qualification assistance, which on your flyer says credit score analysis, but we've modified that a bit. We've gotten an awful lot of calls from people that want to figure out what they can do to raise their credit scores, so when they go to buy a mortgage, when they go get a mortgage on a home, or they want to buy a car, big ticket item, that they can get the lowest possible rates. So as far as what you have, there's a credit score analysis, we're now calling it loan qualification assistance. Basically what we're going to do is pull your credit report with you, we're going to pull your credit score with you, and we have the models that the credit bureaus use to calculate credit scores. So if you have a 650 credit score and maybe you want to go get a home, or you want to go get a car, you want to get the 0% financing on a new car loan, you can do that, but you're going to have to get like a 700 credit score better. We will pull your credit with you, we'll find out what your credit score is, and we have the models. We can sit back and tell you these are the things that you need to do to get your credit score up within a certain amount of time, so when you apply for the loans, you can get the 0% loan. Or you can get a real decent loan on a mortgage on a home or something like that.
Can I ask you a question again? I'm so sorry. What did you call it again? What was the name of that?
On your flyer there, it says credit score analysis, right down to discounted services, that first line, credit score analysis.
Okay.
We haven't given Lisa the new flyers yet, but it's now called loan qualification assistance. And basically, we're trying to help you figure out what your credit score is, what you need to do to improve it, so you can save yourself a lot of money on interest. Okay. We also have a safeguard, identity protection, and monitoring if it's something that you want, and we have an online home buyer course, and we're also a bankruptcy approved by the courts to do bankruptcy counseling and offer certificates. So those are the features that we have. I don't want to spend too much time on that. I want to spend time on our program today for the educational aspect of things. So what we're going to do today we're going to talk about credit reports, and then we're going to jump into credit scores. Credit reports, it's real simple what a credit report is. It's information, it's a record of the credit history that includes your information. It's broken down to different categories. So the first category you have is your identity. Name, address, full or partial social security number, date of birth, and maybe possibly employment information. This is the information that you would find if you pulled your credit report. I'll give you information later on, and in your flyers is how you can get a free copy of your credit report. I don't want you going online, I don't want you paying any money for them, because the government gives you free credit reports. So we'll get back to that. But your existing credit will also be on your credit report. And your existing credit is information about credit that you have, such as credit card accounts, mortgages, car loans, student loans. It may also include terms of your credit, how much you owe your creditors, and your history of making payments. And you're gonna see how that's gonna get influenced when we start talking about credit scores, especially about the history of making payments. Any public record information about any court judgments against you, tax liens on your property, whether you file for bankruptcy, that would also be on your credit report, and inquiries about you. If, is anybody getting any pre-approved credit card offers in the mail right now? A lot of them? Enough of them, right? The way the credit bureaus do, credit bureaus will go and get information about you through your credit report. They'll go to Experian or Equifax and TransUnion, they'll say to them, we want to get a mailing list of everybody in Pasco County, zip code, whatever the zip code is, with a credit score or credit report of this range or higher, and they might pay 2 cents a name for those. Then they'll take them and they'll do a mass mailing on maybe credit card offers, or a Bass Pro Shops, or any department stores. So that's how you get them, and you only get them when you have good credit, because they only want to deal with the cream of the crop when they offer the credit. They don't necessarily the bad ones. So
If they have the pre-approved one that says that, you, do it a secure credit card?
a secured credit card?
Is that considered?
Well, they do offer those. Secured credit cards are pretty good. You know what a secured credit card is?
It's one that you put down.
Yes, you put your money up front, and then you utilize the credit card as you need it. And that's a good way to build credit, by using a secured credit card. So if you have any teenagers that want to get credit for the first time, if you're trying to establish credit, a secured credit card is a good way to do it. Only if the secured credit card provides that information to the credit bureaus. And a lot of them don't report. They utilize the money that you give them, but they don't necessarily report to the credit bureau. So if you're gonna if you think you're gonna get a secured credit card, take a look at all the terms on it, see what all the costs are, but just make sure that they report the information to the credit bureaus. If it does, it'll help your credit score. If they don't, it's not gonna do you any good. It's just gonna be a way for you to utilize a credit card.
Can I ask a question? You were talking about how the creditors go and get a massive of information about the person to send out applying for credit. Do that affect your credit score? When
No.
you go?
No, those are what are called soft pulls, and we're gonna talk about that when we talk about our credit scores. Those are soft inquiries, and they're not necessarily doing that to give you credit. The only time they're gonna give you credit is once you sign on those pre-approved credit card offers and then go apply for the credit. But just for them to do a mass mailing like that, it's the same way as going for a job when an employer takes a look at your background, not necessarily to pull credit, but just doing a soft background check to make sure that, they're happy with what they see in your credit background.
What if you see a listing of those people who get the information from your credit report? Is that still count as your credit?
If you go to Macy's and you walk in and they say, would we give you a new credit card today? And then you went and said, yeah, I got this pre-approved offer and I want to do it, that's gonna hurt your credit, because you're applying for credit. Okay, anytime you apply for credit, it's gonna be a problem. So when you go to a new car dealer and you just have them pull your credit, because you want to get a loan, that's gonna hurt your credit. Okay, and we'll talk
I
about.
always told them no.
I'm sorry?
I always told them no.
Yeah, well, I mean, some people are shopping deals, some people are shopping, different manufacturers, so.
What if you buy a car and they, like different banks, reject you? Is that still, like, they're still going there and pulling your information still?
Yes, if they reject you, they've already checked your credit and they've denied you credit.
Right, but I'm saying that if the next person, the next bank, how the,
It depends
dealership-
with cars and homes. And the reason being is, let's say you shopped 3 or 4 different car manufacturers within 30 days. You went to the Ford dealer this Saturday, next Saturday you go to the Chevy dealer, and the following Saturday you went to the Toyota dealer. If every single one of those pulled your credit, that's only considered one pull. because they consider that shopping for a car. But if you did one today, and then you went to the Toyota dealer in 6 months and pulled it, and then you went to the Ford dealer in 6 months after that, that's 3 pulls. But if you do it within a 45-day window, they consider it 1 pull. Same with a mortgage.
So how much, they say if they pull your credit, how much point do they pull?
There's not one set amount, it just depends on how much debt and what your credit is at the current stand. Okay? We'll get to it when we talk about credit scores, it's gonna answer a bunch of questions for you,
I'm
okay?
sorry.
Credit reports, why are they important? Credit reports are important because lenders, insurers, so Geico, Progressive, all the automotive car insurance folks, they're gonna pull your credit. Employers may obtain your credit report from credit bureaus to assist you in assess how you're managing your financial responsibilities. Lenders, naturally, if you're gonna use your credit report to decide whether they're gonna give you that loan. So going to the car dealer, they're gonna take a look at your credit. If it looks good, they're gonna give you the loan. If it isn't, they're not. Employers, they're gonna take a look at you and take a look and maybe decide whether they're gonna hire you or not. When you fill out an application on the back, you have to sign your name. There's a paragraph right there, by signing my name below, I am authorizing my future employer to pull a copy of my credit and do a criminal background check on me. So if you don't give them that authorization, you're not gonna get the job. So they're using that as a way to screen people in or screen people out. Naturally, telephone and utility companies and landlords are also gonna do it to see if they wanna rent you an apartment. They might wanna get an extra month's security deposit out of you and so forth, if they don't think your credit is good.
How would a landlord pull somebody else's credit?
You have to give them authorization.
Oh, I see.
When you fill out the application for the apartment, you're gonna ask a whole bunch of stuff, maybe some references, and then at the bottom, you're gonna have to give them authorization.
Oh, okay.
Okay. Who collects and reports my credit bureau? These are the 3 major credit bureaus. We have Equifax, Experian, and TransUnion, and they're the ones that gather information about you, for all the information from your creditors to create your credit report. Those are the 3 companies that create the credit report.
I don't remember, which one is the better one that, creditors use?
It doesn't make a difference if you go to one car dealer, they might have a deal with Experian to get the bulk credit reports real cheap. If you go to another car dealer, they might use TransUnion, so it's really a touch and go. What you wanna do is make sure that all 3 reports have the same information on them, because you don't know who's gonna use what.
Because I noticed that when I pull my credit, from each different ones, they're saying totally different credit scores.
Because the information isn't the same, and we're gonna talk about that.
Sorry.
The credit bureaus provide this information in a form of credit report to companies or persons that request it, such as lenders for who you're seeking credit. It's good practice to review your credit report and make sure all your creditors are listed and the information on your report is correct, okay? So if you ever turn down for credit, if you apply for credit, you go to the car dealer or you apply for something and you're turned down, immediately you're also by law able to get a copy of the credit report to see what the problem is. And it might just be a situation that you have just too much credit and they don't want you picking up any more debt. But you'll be able to get a free credit report by law and to figure out what's going on. Accuracy. Credit reports can be accurate. Inaccuracies in your credit report could result in you paying higher interest rates or maybe being denied credit. And what does that mean? That means that if your credit report is, I'm gonna pick a name, John Smith, and you just think of how many John Smiths there are in this country. The probability of a John Smith from Lakeland, Florida, having his information on a John Smith from Palm Beach could happen. Okay, because the names are very similar, especially if you have the same middle name or middle initial, things like that can happen. So the problem is, you want to make sure, and in your case, you were just asking a bit before about how come the credit bureaus are always different, you want to make sure that the information on them is correct. Because if there's a mistake on it, and you happen to have the John Smith who has got the bad credit on your credit report, it's going to hurt your score. So when you go apply for the car loan or the mortgage, you're going to be shot down because your credit score is going to say, oh, you've got these 3 credit cards that are delinquent, and if they're not yours, that can be a problem for you. So you want to make sure you get that taken care of. And also your credit report could indicate if you're a victim of identity theft. And identity theft meaning that if you go through and pull your credit report and all of a sudden you see maybe a credit card from First Bank of California or someplace that's got nothing to do with you, then it could be that somebody stole your information and has opened up credit in your name. So what you want to do is go through a dispute and get that off. Because again, that could make a difference on whether you're going to get a loan or not, okay?
Oh, yeah, that can happen if you have identity theft, it doesn't come off your credit report?
It will come off your credit report if you dispute it. You have to dispute it.
I don't understand, if you have an identity theft.
If you have a if you have your credit report, and let's say all you have is one credit card, let's say Visa card of whatever, you know, Visa Florida, let's say. And then all of a sudden you pull your credit report and it says you've also got a MasterCard of California and you've got an American Express card of New York, and those aren't yours. Well, it could be that somebody has stolen your identity and put credit in your name, or it could be just a mistake. But either way, you need to dispute and get those off because those aren't yours.
Okay, maybe my question was if you have identity theft done on you,
Right?
would that show in your credit report that happened to you as a victim?
If you have, it wouldn't show on your credit report that you've had identity theft done to you. It would show that maybe the items that aren't yours, that were part of the identity theft, would be on the credit report.
Because I was, the other day, I was trying to get approval for a car from a bank, and they saw my report that I was a victim for identity theft.
If there's legal judgments and so forth there, I mean, it could be on there, it could be reported. If a lot of times if you've had identity theft, a lot of times it gets reported to the credit bureaus, so they don't open up new credit in your name without doing some type of background check. So they could have found out that way.
Okay.
Okay?
Thank you.
Review your info on your credit report 6 months before you're going to make a large purchase. And the reason I say that, because in that situation where there's a credit card that isn't yours that's on there, by the time you go through the dispute process and prove and get the thing on, it might take 4 months to do it. So if you know you want to get a car in 6 months, start to go through that process and go through and make sure it's correct.
Now, I did that, last summer. I went through my credit report and there was something on there and I had to get that
Right?
removed.
Okay,
And it took a long time.
sure.
In my mind, I'm thinking you're gonna sit there and just click away and it's poof, it's
You
done.
gotta prove you didn't do it.
Right,
And that's a difficult one to do.
right.
You know, prove you didn't get that credit card, prove it wasn't you that did
But
it.
that's what, it made a difference when I went to get my car
Exactly
in
right.
August.
Because if that comes off and it's disputed and it comes off, your credit score might have gone up.
Yeah.
You know what I mean? Especially if it was derogatory credit.
Mhm.
It really would have hurt your score, okay? Information on your credit report is used to calculate your credit score. And I can't stress that enough. You need to go through and make sure the credit report is clean and correct as often as you can, because that's going to affect your score. And if you're planning on buying something, the score is going to be important, okay? Good questions, everybody. This is something I've been kind of telling everybody to do because a lot of identity theft is going around. You may want to consider freezing your credit. Freezing your credit. And it's very easy to do. You don't hear much about it because the credit bureaus don't make a lot of money doing it. All right? Some states, you don't even have to pay to do it. In Florida, you're required to pay $10 per credit bureau, remember we have 3 of them, right? To freeze and unfreeze your accounts on your credit report. ID theft victims, and if you're an ID theft victim in Florida, there is no charge for it, but this is how it works. You would just go to the 3 credit bureaus' websites. You would go to either Equifax or Experian or TransUnion.com, that's their websites. And go right onto their homepage, and in their search box, just type in credit freeze. And when you type in credit freeze, they are going to say if you would like to freeze your credit, it's going to cost you in the state of Florida, because you're a Florida resident, $10 to do that. Before you can do that, they're going to ask you a bunch of questions to prove that you are you. For example, in 2005, you had a Ford Explorer and the loan was either with Bank of America, SunTrust, or XYZ Bank. Which one was it? If you answer that wrong, they're not going to let you freeze, because they're not They don't believe it's you. But if you can answer those questions correctly, they're gonna freeze your credit. And when they freeze your credit, what they're going to do is they're gonna take the $10, they're gonna freeze it, and they're gonna give you a PIN number. 1, 2, 3, 4, 5, 6, 7, 8, whatever it is. And that PIN number is the only way you're going to be able to go into your credit to unfreeze it. Now, when it's frozen, it doesn't mean that your credit stops. Your credit cards are still going to work. Anything that you currently have, credit still works. It's going to freeze you from getting new credit. So I steal your name, address, date of birth, SS number, and I run outside and I call the bank and I want to get a credit card in your name. Well, they're going to go through, they're going to look at the credit bureau and say, oh, there's a freeze on your credit. What's your PIN number? And the ID theft guy's going to say, see you, bye. But the only way that you can unfreeze it is via the PIN number. And then, so what
It's
you.
that easy, just to give them the PIN number?
Yes. Don't give anybody the PIN
No,
number.
I'm saying to, to the credit bureau, to give
The
them.
credit bureau's gonna give you a PIN number. So
Right,
let's
but if
say,
I unfreeze it, it's that easy.
let's say you just say, go to the Ford dealer and you're gonna go buy that new Ford, you're gonna pull your credit. Because you really want that car. You're gonna say, well, what credit bureaus do you pull? And they're gonna say, well, we use TransUnion. Okay, fine, you go to transunion.com, right in your computer, unfreeze credits, just click right on it, and what's your name, what's your PIN number, $10, it's unfrozen that quick. Now the credit manager at the Ford dealer can go through, pull your credit,
Uh-huh.
approve you for the credit you want, and say to them, you all done? Yep, go back on to transunion.com, pay $10, lock it back up. Don't give anybody the PIN number.
So basically, what you're saying that if you freeze it, there, you can still get your credit, score and your credit information about you.
Yes.
It's the only thing that it froze is if you're applying for.
Applying for new
If
credit.
somebody's
New
on
credit. Yeah.
We're assuming you're gonna be applying for new credit, so it's just a nice way to protect yourself, that's all
You
it
know
is.
what I got yesterday? I got this mail, maybe I have to see you later, called, CICS Employment Services about somebody stole my identity. I don't understand why.
Okay, well, maybe we can talk about it after class,
Yeah,
how's
I
that?
don't know why.
Okay, we'll do that. So you're gonna go to the 3 different credit bureaus, type in credit freezing as search boxes, prove your identity, pay the $10, and get a PIN number. Don't lose the PIN number. Don't give out the PIN number. I have it on my credit, I've had it for 6 years, and I purposely will fill out a credit card application I get in the mail, and I'll send it in.
This is working.
And to see if it works, and also I get a phone call, this is the American Express, and we'd love to give you credit, your credit report is frozen, what's your PIN number? And I was working. Okay, so it's kind of cool. Consider doing it for your kids. Consider doing it for your grandkids when they're 2 years old and you give them a social security number. Believe it or not, I do a lot of these seminars throughout the state. In a lot of the high schools I go to, when I go to the high schools, kids come up to me, they're 16 years old, and say, I just went to go look at my credit report and I have $50,000 in credit card debt.
Oh, boy.
And I don't have any idea what this is. Well, it's usually a family member, relative, or someone that had that information and did it. So if you can lock it, you're only protecting yourself. Okay, that's the best way to do it. And maybe take a look at this, maybe seniors as well, see what you can do about helping them and lock up their stuff. It's really, really kind of important.
So can I ask you a question, with the PIN number, if you don't have it, you can't get credit score, get information, now how, if you lose it or you forget it, how can you
You're not supposed
retrieve
to
it?
lose it.
Supposed to.
You're not supposed to.
Sometimes we have, old
Write it on your
timers,
arm.
Write it on your arm, write it everywhere.
old timers, what?
You really should keep that wherever you keep your
Yeah,
social security
yeah,
card.
but I'm saying
And
that-
if you lose it, it's just a process, because now you're gonna have to go prove to the credit bureaus when you call them that you're really you and you really did lose it, and they're gonna make you jump through hoops. I'm not saying they're not gonna give it to you,
It's gonna take
but
forever.
you
It won't
know,
be easy.
But you will get it eventually, you can get it, but it's gonna
as
take a
long as you
while.
answer the questions right, you will. If you forget the questions, and maybe you don't have the right answers, it can be real difficult. Because they're only doing it to protect you, you know what I
Right,
mean?
that's true, I just figured if you can, I just wondered if you can get that.
Yeah, I mean, I'm sure you can, but I don't wanna vouch for anybody, that's for
Yeah.
sure. So now let's talk about credit scores. We know about our credit reports. Credit reports are simple. All they are is a history of you. It's a history of your background. It could be 1 page, it could be 20 pages. It really just depends how much credit you've accumulated over the years and what you've had with it, okay? So, from that perspective, we know what that is. That's the real biographical history about you. Now we're gonna talk about scores. Scores are real simple, they're numbers. Fair, Isaac and Company are the people that developed the model, otherwise known as FICO scores or Beacon scores. And what they do is they use a mathematical algorithm to take a look at everything that's on your report and put it into a number. Again, lenders are going to base their approval and interest rates on the scores. When they pull your credit, the first thing they're going to look at is the score. If you walk into the Ford dealer and your credit report is 15 pages long, as soon as they hit the button for the score, which is in the first page, it says 800, you're done. They're not even going to look at your report. They're going to base it on the number. Score ranges go from 300 to 850. The higher, the better. The median score in the United States is a 675. And it's gone down. It used to be 700 a couple of years back, but it's gone down. So if you're here or above, you're doing great. If you want to go get that 0% car loan for the new Ford or the new car, that whatever it is, for 50, 60 months, you need a 700 or better. You need a 700 credit score and the ability to pay the loan. Yes?
I was told that if you bought a car and you paid off, they base that on your score kind of deal. They look at your score, but they kind of base it on the product that you pay for or outweigh the scores. Is that true?
I don't know if I fully understand the question.
Like, for instance, I bought a car and for 4 years, my credit was so bad, still was in the toilet. And because of me paying it off, they kind of, even though my score is in the toilet, they still gave me a better interest rate.
They're gonna look at history. And we're gonna talk about all these questions you're asking.
sorry.
It's okay, no, you're doing good, you're great questions. And we're gonna look at those in 2 more slides. We're gonna start to get to exactly the questions
Okay,
you're asking.
I'm gonna shut then.
No, you're doing great. No, please don't do that. Ask the questions. Let's talk about this, just so you can see how numbers help you, okay, as far as interest rates go. Let's say you were gonna buy a house for $140,000, okay? And let's say that it was gonna be a 30-year fixed loan, which means that it's gonna be 30 years, the same amount of payment every month, okay? Well, it depends on your score. Look over here at the FICO scores. You see the different ranges? You notice the different interest rates? Notice that there are real good ones, the 700 to the 850. Look at the interest rate. You're between 4 and 4.2%. But look what happens when you get down to subprime. 620, 639. I'm not saying that they won't give you the loan, but they may not make it easy for you. They're gonna charge you a lot of money. Okay, the difference between here and here is a difference in the payment of about $140 a month. Okay? So $140, that means that on this way, if you have the better interest rate for 30 years, the amount of interest that you're gonna pay in this loan, total amount of interest, will be about $107,000, $105,000. The house cost you $140, an extra $100 for interest. But look what happens if you get down into subprimes and you're down in here. Well, now you're paying $150 in interest, and you paid $140 for the house. So you paid more in interest than you did for the house. So what we're trying to do, and what we're gonna try and teach you today, we want you up here. This is extra money. The difference between here and here is 50 grand. Why not have that in your IRA? Why not have that in your savings account? You know what I mean? Why not do something productive with it? So that's how much interest can affect your credit scores. And let's go one step further. Let's take a look at an auto loan for $30,000, okay? 60-month loan. Well, if you're in the great range, theoretically, this isn't true because if you had this, you could get a 0% loan. You wouldn't have to pay any interest, okay? But if you're down here in a subprime loan, look at what they're charging you for interest. Look at how much more extra you're paying in interest for that same $30,000 car. So if you're down in the subprime for a $30,000 car, you're actually paying 43 grand for it. Versus if you had a good credit score and it was 30 grand, this was 0, you'd only be paying 30 grand.
Wow.
Again, an extra 15 grand, it could be in your pocket.
Oh, yeah, I thought I get a good deal then,
Okay.
because my credit score sucked to the core. And I got a deal for 4.5%.
On a new car?
Yeah,
That's good.
yeah, I'm just, the only reason why I'm.
It can't be as bad as you think if you got that.
Yeah, I'm shocked.
There's
Looking
nothing
at
wrong
it.
with that. I mean,
Yeah, I'm looking at it for a brand new car that I pay almost 30,000,
right.
and I'm getting,
If you get that kind of rate, you're doing great. I
Yeah.
mean, you could have theoretically
No,
get great
my
credit,
score-
gotten 0%. But if you're,
500.
you know, so it really depends on the manufacturer. They evidently saw something that although the score was low, they wanted to give you a good interest rate.
Yeah,
So-
that's amazing, I'm.
But that's money you can save.
Thank you.
So now let's take a look at this. Now comes the meat and potatoes of the whole credit score thing. This is a pie chart that represents your credit score. These are different factors that make up your credit score. Some of the factors are huge, some of the factors don't count as much, and that's what we're gonna talk about today. So the most important thing, when people turn around and say to me, what can I do to improve my credit score? Real simple. 35% of your score is made up of your history. Don't be late. Real simple. If you have a wonderful credit score and all of a sudden you're 30 days late on a credit card, you could probably take a 100-point hit,
Wow.
okay? And it might take you 9 months to get that 100 points back.
Wow.
So when people say to me, what's the most important thing? Here it is. Over a third of your score is made up of your history. So if you sit back and say to me, well, my credit card was due on the 15th, but I was gonna wait till the 20th so I could pay them more money, forget it, I don't wanna hear it. I want you to pay, even the minimum payment on the 15th, you can always add extra later.
Oh, so if you, for instance, say that your monthly payment is $25 and even before the due date, say like maybe 3 or 4 days, you pay $10 because you couldn't pay the 25, you just
I
assume.
want you have to make the minimum payment.
You have to make even, okay.
You have to make the minimum payment on time.
Okay.
So
And then you can always pay extra later.
Then next week, you can pay like an extra $5 or $10. But I don't want you late. If it's due on the 15th, I don't want you looking in the envelope on the 15th. It's not
No,
gonna get
I'm
there.
saying that beforehand, before the due date.
I want you paying the minimum amount
Mm-hmm.
by or before the due date.
Okay.
After that, if the following week you want to throw an extra money in it, you can do that.
Okay.
But this is what they're measuring it on. You gotta be on time.
Mhm.
Real simple. That's the biggie. And people don't understand that, but it really, really is important.
Mhm.
And here's the second biggest piece of pie, right here. 30% is outstanding debt. How much money do you owe? And this is what we're talking about. Manage your current and debt wisely. So if you have car loans, mortgages, credit cards, equity lines, etc., outstanding debt. So this is the rule of thumb to remember. If you have a credit card, okay,
Mhm.
and if your credit limit is, let's say, $1,000, that means that you can go spend $1,000. I mean, you can go spend 900, whatever you want, you can spend that full 1,000. Is that the best thing for you? No. Credit cards in here don't want you charging more than 35% of your limit. So if your limit's $1,000, you really shouldn't be carrying a balance more than $350. If you do that, this 30% will help you. If you max out your credit card and you have the full amount all the time, then it's going to be 30% against you. Okay? So what I want you to do is to make sure that whenever you have a credit card, you always want to make sure that you don't have more than 30 to 35% on that balance. Now, a couple years back, when everybody was going through the home crises and all this stuff, the credit card companies were looking at the amount of debt that people had and saying, oh my God, we gave you, you had $10,000 credit card limit. Things are getting tight in Pasco County. A lot of homes in foreclosure. She's in Pasco County. Let's drop her credit limit from $10,000 to $5,000. Okay, well, that's no big deal. You had $3,000 on that credit card. So that was your 30%. Now it dropped down to $5,000. So now your $3,000 is closer to 60%. So you didn't do anything wrong. But because they changed the amount of outstanding debt limit on your card, increased your debt amount and your score went down. So a lot of people get hurt, and they were still making their payments, they weren't late,
Mhm.
okay? Yeah.
Can you repeat that for me again, cause I'm trying to understand what you just
Credit
said.
cards, if you have a credit card,
Mhm.
okay, let's say with $1,000 limit,
Mhm.
I don't want you charging and carrying a balance more than 35% of the limit. So if it's $1,000 limit, then it would be $350. I don't want you charging the full $1,000.
Gotcha.
Because if you do that,
Mhm.
it's considered a lot of outstanding debt. Creditors get scary when you have too much debt. Why is she using so much debt? How come she's only paying 15 but charging 1,000? Is there a money management problem? And the credit bureaus, remember, the folks that create the scores, take that into consideration and will lower your score. You got it? So you wanna make sure you're at that 35%. If they increase your credit, wonderful. But just because you have it, they're looking to see how well you manage your finances. And managing your finances doesn't mean using all of them, okay? Yeah.
Sorry, I have so many questions, because this is so important for me. So I was told that if you have a credit card and you pay off the end, before the end of the cycle, payment, would that, increase your credit score? Or it just doesn't do anything for it?
If you pay your, in other words, pay your bill off before the bill comes every month.
The whole thing off?
Yeah, if you do that, if you don't carry a balance, it's gonna help your score.
Okay. So
And
paying,
you're gonna save money on interest, right? Because you're not paying any interest because you paid
Right.
it before the bill.
but paying it off then will just
Right, but
elevate
if,
your scores,
but if
right?
you carried a balance, but the balance was still at that 30%, then it really wouldn't make that much of a difference.
So
Okay?
it doesn't matter if I paid off or not, it's just not to stay on
I
the
would rather
30%?
see you pay it off, because I don't wanna see you pay interest.
Okay.
If you're carrying a balance
Mhm.
at 18 or 20 or 22 or 29%,
Mhm.
that's only gonna catch up with you, it's only gonna start throwing extra money out. So
Gotcha.
if you can discipline yourself to only use it, and when you use it, pay back in full before the due date, then you use their money for free.
Gotcha.
I mean, that's a great deal.
Mhm.
That's a really a great deal. So something to consider, okay? Now we're getting a little bit smaller pieces of pie over here. This is 15%. This is length of credit history. How long have you had credit? Better if you can show you've managed credit for a long period of time. In my wallet, I have the same credit card that I got when I graduated college about 3 years ago. It is an old credit card. And because that's an old credit card, I've had it for so long, and I'm showing that I can manage it for that period, is 15% positive to help me. If I closed that credit card, my score would take a big hit. Why?
Wow.
Because when you close that credit, right, I cancel a credit card, my current history is now gone.
Wow.
So I always encourage people, even if it's not the best credit card, if you can use it, pay it, and keep it for a long period of time, it'll really help you. So think about this. That credit card, my wallet, I've had it for all those years, 15% positive, never been late with it, 35% positive, and I never keep a big balance on it, 30%. My credit score is an 838 out of a possible 850.
Wow, great.
If I close that credit card today, I'd probably get down to 700 just like that. Because my history's gone. So if you're at a 725 or a 730 and you close that credit, you might drop it down in the 600s. You understand? Yeah.
What if you have the credit card and you paid off and you never use it again? Would that,
Well,
May
why
have
would
this credit score?
why would you do that?
like, for instance, you just use it for emergencies and
Yeah,
emergencies
well,
don't happen
I
all the
would,
time?
I would use it every month. I would buy pizza with it, I'd buy gas with it, make sure I pay it off every month. I would exercise and use it.
Okay,
You're showing people you can manage your money.
okay.
A lot of credit cards, if you take them and just put them in the bureau and don't use them, after a while, they're gonna charge you an inactivity fee, $25. And a lot of people, when they get that bill saying, I'm not paying $25, I didn't use the card, yeah, well, don't pay it. And if you don't pay it on the due date, it's gonna be a $39 late fee, so it's gonna be $25, a $39 late fee, they're gonna charge you interest, and you're gonna take a ding on your credit because you're late.
Oh, wow.
And then that goes every month, that you say, I'm not paying it.
You got it. You just go just like this, a downward spiral like you have no idea. So, I don't want you not to use the credit card, even if you just go buy gas in it and then buy a pizza and then pay it off, exercise is the best thing for your credit. But don't close out the old ones. Some people come to me and they've got like this wallet and it explodes open with all these credit cards. Well, I'm not a fan of Macy's credit cards, I'm not a fan of JCPenney's and those because they're high interest cards. But at the same time, if you've had them 20 years and you've been using it and still pay it, by closing it, you could actually hurt yourself. Okay, so really kind of pay attention to that. So now we have another one, credit mix. Notice it's getting a little bit smaller. We've gone
Before you move on, if you have a credit card and you're making the payments and all that, but you're just not charging any new items on it, is that really to what you just said? About the,
If you have a credit card,
yeah, you're making the payments and all that, but you just don't use the card anymore.
okay, meaning because you're carrying a big balance? Is that why you're making payments?
Well, you have other credit cards, you don't wanna use that one in particular.
Okay,
Is that an inactivity issue?
it could be. You have to take a look at whatever they have under contracts and conditions of the cards. And if you don't use a credit card, you know, whenever you get a bill in the mail, they always send you the bill, but there's always like all these conditions attached to it. Well, they're changing them all the time in their favor, and you're not gonna read it all. If they change it, you don't happen to pay attention to it, and then you keep using the card, you're you know, saying yes to the conditions. So they could change something and you don't know about it. So if you can, put 50 bucks on it, put some gas on it, do something, use it, and so forth, and it'll be just good for you to do it and just pay attention to see what it's doing. Okay? Credit mix. What kind of credit and debt is on your report? We have two kinds of credit and debt, folks. We have secured versus unsecured. Secured are home loans and auto loans. If you don't make an auto loan, the repo guy comes, takes the car. Okay, usually secured loans carry a lower interest. Unsecured are credit cards. They usually carry a higher interest. Why? Because if you charge pizza and you buy a pair of pants and you don't pay your bill, they don't come get the pizza, they don't take your pants. But they will charge 18, 20, 29, 30%. So we want you to have a mix on your credit report. We want to have unsecured credit and secured credit. And let me tell you about a story that happened real quick. I did a seminar in Orange County in Orlando. I was watching news there 6 months ago, and there's an in-your-face eyewitness news reporter that we have a problem and you can't get it fixed, they're gonna help you take care of it. And they had this senior citizen, he was hot under the collar. I've got Progressive Insurance, and I'm still driving the same car, and I haven't had an accident, and all of a sudden my insurance rates went up, and I have no idea how come, and they went up $300 every 6 months. He was just hot. Couldn't figure out why. But what happened was, that past month, he just got done paying off his house. He had a 30-year mortgage on a house. Usually when you get done paying it, you burn the mortgage and have a bottle of champagne. Well, he just finished paying it, and when he did, what happened? The secured part of it now left the model on the credit report. Didn't have the secured and the unsecured anymore. The secured went away. Well, now all he showed was unsecured. Because of that, his score went down.
Wow.
And when your score goes down, the insurance companies are monitoring what's happening, and all of a sudden your rates go up because you're considered a risk. So how could he, I know, ridiculous. How could he have fixed it? Maybe he had an equity line on the house. You know, if he had the equity line, it's still a secure line, it's there, and he'd have the balance. So, I
See,
mean,
basically, sorry, you're telling me if that gentleman you just gave a scenario about, you're saying that they increased his payment because he paid off his house?
no, his insurance payment, yes.
The car insurance? Or-
Because his insurance is based on risk.
So did they go and check his credit?
They check your credit report every month.
For car
They check
insurance?
it, yes, they do. And if your scores create a problem, then they're gonna charge you a higher rate because you're considered a risk.
Oh,
And because that happened to him, and that secured part went away, then what happened, all of a sudden his balance went down, his score decreased. And when his score decreased, the insurance company saw it, and they get the little parameters that if this happens, increases by X amount of dollars, because
Oh, I
it's
didn't
considered
know
risk.
that.
That's why people with bankruptcies, when they go and get a car loan and so forth, they're high risk.
Now, I have my son on my insurance, my husband and I and our son. Now, will they pull his credit report too, my son's?
Yes,
And that will.
because all the drivers they're gonna pull.
Oh,
Hmm.
okay.
Even though if they don't have a credit report and they like, under certain age, like under 25, you have them on your car insurance, is that helping their credit to,
The only time you're going to help their credit is if they're actually borrowing money and paying it back, have some type of credit, or whether it's a credit card, whether it's a car loan or something like that. And they're gonna do it. You really wanna do it when they're 17 or 18 and start to build credit. You want them off you as quick as you can.
Yeah.
You don't want them anywhere near you.
No.
You know, and it's good for them anyway, okay? And the last one, the last category is inquiries. Be cautious with your credit applications. Every time your credit report is pulled, and notice the word, hard inquiry, it lowers your score. You go to the Ford dealer, they pull your credit, your score goes down. Even if you didn't buy the car, your score goes down. Why? Because remember this piece here, the outstanding debt? You're gonna increase your outstanding debt so your score goes down, all right? Hard inquiries, soft inquiries, I applied for a job someplace and they pulled my credit. That's a soft inquiry, doesn't hurt. You pulling your own credit report is a soft inquiry. You don't hurt your score. And if somebody pulls your credit, you're gonna go to K Jewelers, you want a credit card, Circus City, you want a big screen TV with a credit card. Anytime that happens. So when you go to Macy's and they say, would you like to open up a Macy's card today and save 10% of the thing? No. I saved 10%, but I hurt my credit score 50 points. Especially if you're trying to build it, okay? So you really don't wanna do that. So what do we got? The scoring model, the FICO model, remember I told you it's an algorithm. It doesn't look at any of these things. It doesn't care how old you are. You didn't see anything on those pie charts that said your age. It didn't say your race, whether you're black, green, blue, or purple, or you're male or female, or length of employment job. Your income can affect, because you can have a great score, but not make a lot of money. And you may not qualify for a car loan. You might make $10,000 a year, you might have one credit card, you might pay it on time. That could give you an 800 credit score, but you can't afford a $50,000 car and 10 grand. You know what I'm saying? So that's why people with bankruptcies that are millionaires, okay, they're millionaires, but they can't get credit because the bankruptcies are knocking down to 500-600s and so forth, okay? Education, marital status, whether you've been turned down for credit, length of time in your current address, whether you own a home or rent. None of those have to do with the algorithm models that come up with the scores. So let's take a look at some of these zappers. If you file for bankruptcy, look what happens to your score. You're going to lose anywhere between 165 to 365 points on your score. A foreclosure can cost you 100 to 160 points. A short sale mortgage, and that means selling your house for lower than the amount because you want to get off under it, is going to cost you probably 140 points. Settling a credit card debt for less than it is owed, it's going to cost you. 30 days late on a payment, remember? One late payment, look what it's going to cost you.
Wow.
Maxing out a credit card,
wow.
going to the full amount of the limit as opposed to 30% like we talked about things.
That's not bad though.
That hurts quite a bit.
So if
Okay?
you max out your credit card in December
Mhm.
for the holidays, then you pay it off January, February, March comes around, you max it out again. That's twice you get a hit at 10 to 45 points?
When you pay it back off, it could go back up. You borrow full against it, go back down. I mean, scores keep doing this all the time, right? They do that all the time. I met a guy that decided to pay his son's first year college education with his credit cards. It's $30,000 bill, so he paid a tuition first year, $30,000 with a credit card. I said, why'd you do that? He says, destroy your credit. He said, I didn't care. He says, I get reward points in my credit. And he says, I get double points. And he said, with the 60,000 points, I gave him a flat screen TV as a gift for free, and I paid off the school next month. So it really depends, what you want to do and what you can do with it. So, how to improve your credit score? Review your credit report thoroughly. Make sure there's no errors. Make sure there's no hiccups in it. Make sure that it's always clean. Pay your bills on time. Remember we said that's the biggest factor? Reduce outstanding number of credit cards, only if they're young. If you have a 20-year-old credit card, don't go closing it because you had it for a long time. But if it's 1 or 2 years old and you just want to focus down, you could consider doing that. Debt ratios on your assets and income level. You want to make sure like that 30% rule, 35% rule on their credit cards. Avoid maxing out credit accounts. Only apply for credit as you need it. Maintain credit accounts for a long time. And if you have a difficult time paying your bills in full and so forth, always contact the creditor. Try and make arrangements. Don't run and hide. That's gonna hurt you. If you can do it, they will do that. Beware of services that claim they can fix a bad credit history or inaccuracy. Nothing but time and diligence can fix your credit. Don't go pay this guy $200 to fix your credit report because it's something you can do on your own. Okay?
Could you go back 2 screens for a minute? Where you, the Zapper part?
Got it? Okay.
Yeah, just give me one.
Oh, okay, no problem. Usually people take pictures with their phones.
Oh, that's a
Click,
good
click,
idea.
click.
Yeah. I've done that.
Now, I'm gonna go to the 2 more slides ahead. Once he gets done copying this down. What I want you to do is the website, which is also in those flyers, is annualcreditreport.com. That is the US government's website in order for you to get a copy of your free credit report. By law, thank you, you are entitled to, here it is right there for you. I'll take a picture of it, it's in your flyer as well. You're entitled to 1 free credit report every 12 months. Here are your credit bureaus, Equifax, Experian, and TransUnion. That means if you get 1 every 12 months, that means you're getting 3 in 1 year. 1 from each different bureau. So something you may want to consider, staggering your credit reports. And what does that mean? Think about this. Go get the Equifax one today. And in 4 more months, put in your cell phone so the bell will go off, and go get your Experian one. And in 8 more months, go back on and go get your TransUnion one. And in 12 more months, go back and go get the Equifax one. Now you're getting a different one every 4 months, and if most of the information is correct, it's a good way for you to check for identity theft as well. Okay? That's a real good way to do it, annualcreditreport.com, and that is in those flyers. Scores are not free. Credit reports are free, not scores. So, usually when you get your credit report, they're gonna say, would you like your 3 credit scores for $10.95? Well, I don't know if you really wanna have to pay for it. So, if you go to any of these, just go to Money MSN, Bankrate, or just go to Google and type in credit score calculator. If you do that, a bunch of them are gonna come up, and when it does, it's gonna ask you a bunch of questions. How long have you had credit? How long, you opened up on a new credit, how much debt do you have? And by answering those, they're gonna give you a credit score within a range of 10 points. So unless you're really, really gonna go buy something, I don't know if you really wanna spend 10 or 11 bucks doing that. So just go to Google, type in credit score, free credit score calculators, and you'll come up with a bunch. Now, your credit score is always changing depending on your money management. Pay your bills on time, you don't owe a lot of debt, your score could go up. You carry a lot of outstanding debt, your score could go down. Your credit will only be as good as your spouse's. And this really raises havoc when I go to colleges and I catch the kids in the back row making out, And I say to them, well, are you guys getting married? And they go, well, we really like each other. I go, well, do you know what his credit score is? And all of a sudden they stop. Well, what do you mean? I go, because if you go to buy a house, they're going to use the worst credit score. So before you start getting all lovey-dovey and so forth, and you're really gonna make a future, maybe you wanna just check his credit score, check her credit score, and make sure that what you're getting into is something good, and maybe you wanna get that fixed before you do something. Your credit will be a key factor in employment and the interest you pay. Managing your credit is #1 priority, and maybe protect yourself with credit freeze. Those are kind of things to do. Perfect, we made it, 1 o'clock.
Pretty good
Excellent.
questions, huh?
No, you guys did great with the questions, they're wonderful. What can I answer for you? Any questions? How do we do?
Did great.
Everybody good?
Yes.
Good information?
I need, if it's okay with you.
Yeah, I can, after work,
I afterwards.
yes, I'll spend time with you, it's not a problem.
That's like 5 minutes.
Yeah.